right.
How's it going?
Pretty good. Pretty good. Hey, it's a glorious spring day out there. Um,
Yeah,
yeah, we're growing a grape trellis right now. So
there we go.
grapevine.
I've got an intern with me this week too.
Oh, you do? Oh,
Uh,
excellent.
He's
Yes,
hanging out, Hayden.
Hayden. Oh, good, good. All right. So this is very good. We're going to go through our podcast here. Looking forward to getting a full kind of detailed look at your operation.
Yeah.
But more than that, it's obviously it's your opinions on how things are going. It's everything about what's making your operation unique.
Yep.
And yeah,
No, that's
okay,
cool.
very good. All right, so let's get that going on here now. You hear me fine?
I do.
Audio's good here. You're coming in great. I'm just checking my numbers on that. Uh, okay, good. All right. All right.
Do you want me to
Mhm.
switch to a virtual background or is this one fine?
Well, let's see now. You have that's an interesting background. It's got your diplomas, and then you've got blue sky and kind of a nice thing over on the other side.
Yeah.
I would think it'd be fine. It shows
Okay.
your professionalism with the diplomas. That's perfectly fine there. Yeah,
Okay.
very good. All right, all right, Depeche. So we'll do a little bit of a countdown here. And again, our team will do technical editing. It'll end up probably about 30 minutes approximately. And, we'll look forward to sending you those snippets as well. So without further ado, we would like to welcome Depeche. Depeche, welcome to the show here. This is
Good
amazing.
morning.
Good
How are you?
morning. I'm very good this morning. Beautiful day out here, isn't it? Yeah. So for our listeners, Depeche has quite a career of actually doing what he's investing in. So without further ado, let's just jump on in. Can you give us an overview of your life and how you ended up sitting in that chair right now?
Yeah.
Go for it.
So a couple years ago, I retired from a uh, about a 20-year practice in dentistry. So my specialty was in treating TMJ and oral surgery.
Hmm.
Uh, and during those 20 years, I was a pretty avid and heavy real estate investor, right? So whether it was doing my own deals or investing into other people's deals, uh, I was involved heavily in both. And I was also running kind of my own little lending business on the side. So all of this is kind of the fruition of and the fruits of 20 years of labor in real estate investments of all asset classes, of all types, and of all sizes, really. So I've seen like the good, bad, and the ugly of all this stuff,
Yes.
over
Yes.
the years.
All right. So what is your specialty now? And how did you get into that specifically? And what was the light bulb moment that said, all right, I need to go at this full time? And you made quite a
Yeah,
success out of it.
yeah. So what happened was like all of my investment income outgrew my surgical income. Now,
Yeah.
even the surgical income was healthy, right? But my real estate investment income just kind of compounded, right? So over
Okay.
the over time, I decided, hey, at some point, there's only so many hours in the day. I really need to focus on one thing and really develop deep dive subject matter expertise into the real estate world. So that's when,
Hmm.
I exited out and started formalizing the operations.
Hmm. Hmm. All right. And was it a conscious choice then, when the income very healthy and all of a
Yeah,
sudden, yeah,
it
okay.
was very strategic and planned out, right?
Mm,
And you know, once I exited clinical practice, then I really had time to sit down and think through, what does the next phase look like for me, right? What do I want to accomplish? How do I want to create impact, for my family and a social impact and philanthropy as well. Uh, And that gave me time. It afforded me time to go through all of the historical deals I've done, right? And as I went through
Mhm.
that, I quickly realized that there were specific asset classes targets that were safe and steady and reliable. So moving forward,
Mhm.
now it allows me to really kind of go deeper into those specific asset classes.
All right. And it's your specialty. You invest heavily into health operations,
Healthcare.
right?
Yep. Yep.
Healthcare. Yeah. Yeah. And was it based on your experience? I mean, you obviously have done so many
Right.
years of surgeries. How many surgeries was it again that you did?
20,000 over 20 years.
Oh my. So you know a
Yeah.
thing or two about about this area, don't you?
I
Of course.
enjoy it. I miss it. It
Oh,
was a
good.
great time. And now the goal is, to impact 20,000 investors over the next 20-year span of real estate investments.
20,000 investors. So you
Yeah.
going from 20,000 surgeries to 20,000 investors.
Right.
Okay. Well, that is an amazing goal here. And with your achievements that you've accomplished already, um, hey, the future looks bright. But I got to tell you here, for say our younger people getting into real estate, getting to real estate investing, it is
Yep.
not all a bed of roses. Could you take some time here, Depesh, and go through a situation in your investment career that
Yep.
was tougher than nails? Tough, tough, tough. And, you know, was there a solution? Maybe there wasn't at the time. But how did you plow through that, make it to the other side, and keep your business growing?
Yeah, I'll give you two examples.
Yeah.
One was like investing into deals, like for example, multifamily deals as a LP or a limited partner, right?
Okay.
And you make these investments based on, the marketing thesis and the documents that you get. And when times are good, even bad deals can be okay, right?
Yes.
It's these investments that we made during low interest rate times. And then as the economy shifted and these floating interest rates, went up, that's
Hmm.
when, these operators, the GP operators, the sponsors started getting into a hard time, right? Uh,
Yes.
at this point, like on these LP type investments, I'll be lucky if I even get my principal back
Sure.
out of
Hmm.
these deals. And, we've already been in them over 5, 6, 7 years now, um, with
Hmm.
no returns. You're not hearing about anything or anything like that. So it's just a tough situation. So I now when people ask me about investments, it's like, hey, really get to know the sponsor who's doing the deal. What have they done historically?
Mm.
Uh, when things hit the fan, what's their exit strategy going to be? How are they pivoting, right? So in what I always tell people in real estate, it's not an easy business, right? There's so many variables that
Hmm.
are outside of your control as well, right? What
Yes.
separates like the little guys from the big guys is when those times hit, how do you pivot and change to bring the cart back on the track, and right side the project again? So that part of it's important. Um,
Hmm.
on the ownership side, the second example I'll give you,
Okay.
ownership side of businesses where I'm in hospitality as well.
Hmm.
And you have hotels during COVID timeframe that are throwing up zero revenue.
Yeah.
Like
Yeah.
nothing's coming in the door. There's no meetings happening, no travel, everything's shut down. And it took every everything
Mm.
out of me to keep the doors open on the
Yeah.
properties. And
There was an alligator calling for you every month,
every
naming
month, the
yeah,
the mortgages and
yeah.
just operating costs and property taxes and the list goes on and on and on. Uh,
Yeah.
when the world shut down, it's the bank payments don't stop, like property
Right.
taxes don't stop. And if I didn't have health care, I would have been upside down and all the other stuff real fast.
Yeah. Yeah. Well, that's quite a story of guts and patience. Patience
Right.
is part of this, and you've got to have those as well as nerves of steel. Sometimes when the economy goes upside down
Absolutely.
or sideways, which is it fair to say the economy is sideways right now? Dipesh, what's your handle on the healthcare industry that you're investing in specifically, as far as the institutional factors that are out of your control?
Yeah, so as I've studied it and as I look at it, I think it's a great time to be in it, right?
Yeah.
Why? Because when we look at all the dips in the market and we look at various asset classes, healthcare
Mm,
is one that's kind of stayed stable throughout, right? Um,
mm, yeah.
and me having worked inside of the four walls as well, I understand the ins and outs of the operating businesses. I
Yes.
understand the ins and outs of the debt structure of the operating businesses as well. And from a payer reimbursement perspective from the insurance companies, right? Why?
Yeah.
Because the doctor's offices rely on the insurance company income to stay afloat. And the beauty of doctors' offices is once they build a location and they invest in it, they're not looking to move locations from every couple of years, right? When's the last time
Mm,
you saw like a surgery center move locations? It's pretty
mm,
rare that that
yeah.
happens, right? So it's a stable asset class. So for us, healthcare real estate is kind of what I really kind of focus in on
Yes.
and underwrite
Mhm,
for
mhm.
long-term growth.
Right. So, Dipesh, your current model of buying surgery centers, all cash, and then
Yep.
exiting them via DST vehicles to 1031 type of buyers, it's quite innovative here. Can you walk us through the core mechanics of this strategy and why you
Yeah.
believe, yeah, it's a smarter play than traditional property value appreciation, for example?
Right. So for the first time ever, I'm creating like syndications, right? Opening up to outside capital. And the reason is I've always done surgery centers myself, right? But my goal now is to acquire larger centers without the use of debt. So I'm,
Yeah.
looking at assets that are, between 10 and 20 million in size. So
Yes.
instead of using debt to take them down, what
Hmm.
I'm doing is using my money plus pooled money from investors to take down the asset, right? So we're creating essentially a fund. The
Yeah.
fund will acquire the asset. In this case, will be a outpatient surgery center type real
Hmm.
estate, right?
Hmm.
Then what we're doing is I'm contributing the assets into what's called a DST, a Delaware Statutory Trust. And the reason for that play is I'm using the fund, I'm using commercial real estate to almost get a fixed yield on my investment. Okay.
All right.
What the play is here, especially at like my age now, I'm not looking to get into value add thesis models or I'm not worried about the property appreciating and selling it at a appreciated value and making money on that. Essentially, I'm teeing these assets up for 1031 motivated buyers to exit us fund investors out. Okay. Now,
Okay. Hmm. Nice.
for the 1031 buyers, you have a ready to go asset. You have something that due diligence is done. It's unlevered. So you're getting, passive income distributions, things like that. And you get, the depreciation of having real estate assets as well.
Hmm.
For fund investors like us, we get to go in and out of deals almost every 2, 3 years. Okay.
Right.
So I get it's a beauty of both worlds. So it's almost kind of like saying it's almost like a private credit-esque model using commercial real estate, getting a certain yield on the product without having to worry about product appreciation or
Mm,
governmental policies or changes in the economy or anything like that. Um,
nice.
and we're doing it on a totally unlevered product.
Unlevered being more secure, safer,
Right,
basically. Yeah, yeah.
right,
So this approach decorrelates from current economic conditions, good,
right.
bad, or indifferent, or sideways. Um, what kind of fixed yield rates are you seeing during the whole period for you folks? How's that work for
So the way I've modeled it out for our office is, when we invest into these type of deals, we'll come out with approximately 11 and a half preferred
you? Okay.
return,
Yeah.
and
Hmm.
we'll end up with about a 13 and a half IRR. And
Hmm.
this is going to be 2 to 3 years, max 3 years type of deal for us, right?
Sure.
On the backside, because it's commercial real estate, it gets taxed as long-term capital gains versus ordinary type income.
Hmm.
So
Hmm. Got it.
we get the kind of the tax benefits, this tax strategy of that as well.
Right. Right. Okay. Um, well, given your background, I mean, you've seen the evolution of business and technology. And
Yep.
for myself, I'm of a certain age. I've embraced technology later in my career, buying property in Texas using tech. But how has technology or the lack of technology impacted your journey and your current investment platform?
So we use the AI agentics and AI robots quite a bit, right? So it
Yeah.
helps us quite significantly with deal analytics, deal
Yeah.
structuring, and that sorts of stuff. Now, yes, we still have humans, right? Uh,
Sure.
but it creates for much smarter and wiser investment decisions for us as
Hmm.
well. And the efficiencies that it creates in the office are well worth it.
Right. Right. So you're seeing savings all around.
Yeah,
Uh, yeah.
yeah. More, I would say more efficiencies all around.
And more efficiencies. Sure. Sure. So, Dipesh, what does a typical day look like for you now, especially as you're launching these funds? Are you still heavily involved in the property acquisition, or do you have a team built to handle that?
Yeah, so luckily for me, we've got a full team
Okay. Yeah.
to handle quite a bit, right? So the entire C-suite's built out. We have a team of legal and accounting as well. And I sit more on the visionary side on, looking for signals in the market where we should turn and pivot into and things like that. And
Mhm.
this week I've got the pleasure of having my first intern ever as well. So as you get older,
Excellent.
now I'm helping the kind of next generation that's getting into college
Mhm.
on figuring out what they want to do. So it'll be a fun week this week.
All right. All right. And what do you have in store for your help this week?
Well, this evening we're going to a AI agentic seminar
Oh,
here in town, so that'll be neat. We've got he's going to be on a couple of investor calls. And
yeah.
then I'm sitting down with him and doing some modeling work on Excel on some projects that we're looking at.
Wow. Excellent. Excellent. All right. Here's a bit of a crystal ball question, but with your experience here, I think the listeners' ears are going to be perking up to hear what you have to say. Looking ahead, what is your strategic vision for your company's future in healthcare real estate? And where do you see the biggest opportunities ahead and the biggest challenges?
The biggest opportunities I see are going to be in innovative product and innovative product design. Okay. Uh,
Okay.
so a lot on the engineering side, uh, and all of that, right? So the goal here is now going to be marry your, you know, AI innovations into the real estate sector. We have to do a much better job on, figuring out and bringing back to life like your traditional strip centers, right? So
Yeah.
it's, we all know that it's a outdated type of business model,
Mm.
but we've got to do a better job on bringing those type of things back into place. For us, most of our energy is going to be in the healthcare space.
Yeah.
So, my focus is not only on the real estate side of healthcare, but
Hmm.
also in surgical innovations and surgical education for better outcomes of procedures, right? So that's what those techniques will then allow us to take what are currently outpatient surgical procedures into a clinic setting in a very safe and efficient manner. Um,
Mm.
and then obviously our funds are more on the building side of stuff, so the real estate side of stuff, right? So
Hmm.
it's a multi-pronged approach. We want the individual doctors operating businesses to be successful, right? So whether we're
Hmm.
providing mentorship or you know
Hmm.
outreach or some kind of credit to for them to expand their businesses or whatnot, it just makes our real estate holding operations that much stronger.
Yes, yes. So an educational component to this? Uh, yeah,
Absolutely.
definitely, definitely. Okay. Could you comment some on the geographical importance of healthcare centers? For example, what would be the difference in investing into healthcare in the Northeast versus the Southeast? Um, really like to hear your insights on localities here and
Yeah,
what,
so
yeah.
things I look at when I'm looking at these is, what are the property tax conditions going to be in the market, right? What are the historical escalations look like? Um, and which states are more like, friendlier to business and things like that. So we
Mm,
look at all of these type of things. We look at primary markets versus secondary markets,
mhm,
uh, versus tertiary. And
mm,
we kind of look at also insurance company and pay reimbursement trends as well in
mhm.
these different type of markets and geographic comp sets as well, right? So at the end of the day, I'm looking for stability, like in economic stability. So
Yeah.
all of these things matter. What a traditional finance only background real estate individual is not going to be looking at insurance payer reimbursements, how that model is shifting
Mm,
across geographical locations. Uh,
mm.
so those are kind of like the smaller details that I look at when looking at locational based
Yeah.
assets.
Okay. So it's more the overall picture, but the
Right.
insurance a part of that is pretty important. What would
Yeah.
you say is the most important factor here?
Well, the shift we're seeing right now with in the insurance reimbursement space is outpatient procedures are going to clinic settings, right? So we're
Okay.
looking at the trends of, hey, or do we have doctors that are adopting this philosophy or not, right? Are they
Mm,
following these type of trends? And really it's for their success because at the end of the day, if they're successful, then we're successful. If they're successful, they're able to pay the triple net lease that they have to
yeah.
pay us on a monthly basis, right? So it just
Mm,
helps us kind of stronger secure the deals.
right. Okay. And when you're looking for operations to buy, um, Morgan Stanley came out with their paper just last year on adoption of new technology, specifically AI, into companies throughout the U.S. And well, they effectively are saying, up to a 25% haircut in companies that don't have this Do
Right.
you target companies that are weak in technology, for example, knowing that you can bring that in when you do a takeover or purchase that? Or,
So, so we look at it, but they have to be open to embracing the technology, right?
okay.
And that can
Mhm.
almost become two different animals.
Yeah.
Because if you have a group that's just flat out not open to embracing the technology, that could be a potential deal killer.
Mhm. Yes, yes, because they're simply not going to do it. Yeah.
Right.
Okay. That's very
Uh,
simply put. So, okay. Yeah, Depeche, would you care to put on your crystal ball again and look at the totality of the healthcare industry in the US and see where we're going to be in the next 3 to 5 years? What's your take on where healthcare will be as far as new technology, as far as new forms of delivering that to people?
yep.
Yeah.
Yeah, I think there's a lot of growth and opportunity on the horizon, and
Uh,
I'm involved quite a bit on, you know, in early seed investment options in healthcare technology companies, and innovative surgical procedure type of methodologies as well. So there's a
huh.
lot of growth in the pipeline for sure. So in terms of stability of the industry, it's definitely there. Uh, I'm really bullish on the segment as well, obviously.
Mhm.
And I'm not too worried about the healthcare industry in general. We have a aging population. We
Yep.
need strong technological advances to create efficiencies in procedural outcomes as well.
Mm.
Uh, and then the payer markets, the reimbursement markets, definitely have to improve.
Mm. Mhm. Mhm. So they definitely have to improve their. Are they weak right now? Are they?
Yeah,
Yeah. Yeah.
certain areas are are pretty bad. Uh,
Okay.
they definitely need revision looked at because the reimbursements for the clinicians, it just doesn't look good,
Okay. Hmm.
you
And
know?
what's behind that? What's your take on what's behind that? And how do we get that fixed?
Well, and it's tough there because there's so many layers to this onion, especially in the healthcare setting, right? Because you have the patient who needs the treatment, the insurance company who is kind of the payer, and then you have the medical system, and then you have the physicians, right? So
Hmm.
by the time the physician sees any revenue, y- there's so many cuts in it that it's almost like they're seeing less than
Right.
50% of what they work for.
Oh my. There we
Uh,
go. Yeah. Okay. Yeah. So yeah, that's an interesting take. So there needs to be evolution in the insurance industry as well as we move forward,
yes,
and hopefully that'll work together. Um, you know, you're in an industry that that is unique. It's well positioned today, as you mentioned. You know,
right,
we're an aging society, so we've got to make some changes here to adapt to that.
right.
But as a field to be into, it's a great field to be into right now, and you're leading the pack in this in a huge way. So Dipesh, I want to thank you so much for this insightful conversation. I feel like it would truly need several hours to really dig into this more, and
Absolutely.
and I I would look forward, to some further conversation with you, in
Sure.
your expertise, leading the way forward in this field. So, I need to ask you, Dipesh, how do people
Yeah.
get a hold of you? People want to get in touch with your investors.
Yeah.
Yeah.
The best thing to visit the website, acurecapital.com. It's ACUERE capital.com, and reach out via the website. I'd love to have a conversation.
That would be wonderful. That'd be wonderful. So thank you so much for being on today. Good luck moving forward. And people should really benefit from this podcast to understand the importance of healthcare investing from a true professional in here who's made a difference, as well as doing 20,000 surgeries over the years. Yeah. Thank you, Dipesh. All right, that's a wrap.
It was my pleasure.
Um,
Yes.
all right, cool. And thank you for your detailed look at some of these questions. Truly, we need more time. I do my best to offer as much time as possible, and then we've got to synthesize this down, which we will do,
Yeah.
um, and send you those snippets
Okay.
ASAP. So we'll do that. We'll create the tidbits, the snippets, and our tech team will get those taken care of for you and send them out so
Yeah.
you can use them in your
And
social feed. Yeah,
I'll add your email to our CRM as well.
perfect. Yeah.
And as we launch our sequences and stuff, you'll be on the on the list.
Okay.
Yeah.
And I want to ask one more question, and they'll arrange it and edit it the
Yeah.
thing to include it in here. But Dipesh, before we wrap up, is there anything else you'd like to share or any final thoughts on your unique approach to real estate and investment?
Yeah, so what makes us unique is the ability to use commercial real estate, specifically in healthcare real estate, to get, strong, predictable yields in a
Mm.
very short cycle fund
Mhm.
of 2 to 3 years max.
That's it in a nutshell. All right. Very good. Again, thank you, Dipesh. That was excellent. And we'll be in touch with the snippets very soon. Appreciate so much your time and insights, and good luck with your young person there. Yeah, good luck moving forward, and
Yeah.
we'll talk again